Today, traders are waiting for the key employment data in the United States. According to forecast, the US labor market is overheated again, which is why the US Federal Reserve may continue its battle against accelerated inflation by tightening monetary policy. And now the confirmation of a strong labor market will only add fuel to the US dollar rally. Amid a stronger greenback, traders pay close attention to important macroeconomic reports in the Eurozone. The preliminary inflation data released today showed that consumer prices were rising at a slower pace in December than they previously expected. The yearly inflation rate came in at 9.2% instead of 9.7% predicted by analysts. This reading represents a 4-month low, which makes Europeans' economic outlook a bit more optimistic. At the same time, this factor is putting pressure on the euro, as the European Central Bank may slow down the pace of rate hike or even put it on a halt. Still, core inflation, which excludes energy prices, is running high, which is why the European regulator may continue its monetary tightening at the previous pace. François Villeroy de Galhau, governor of the Bank of France, said recently that ECB interest rates should peak by summer and stay at this level for a long time. This is needed to bring inflation down to the level of 2%, and it seems that the future monetary policy will mostly depend on the decision of the central bank officials rather than on the actual state of the economy. The euro-dollar pair dropped below the level of 1.05, pressured by a strong US dollar ahead of the nonfarm payrolls report. Besides, traders are hesitating to choose in direction, and the future of the ECB rate is not clear yet. Analysts predict a change in the trend at 1.0498 and a further decline of the quote to the level of 1.0419. Meanwhile, the British pound lost ground and plunged to the downside, having broken through a monthly low of 1.1970. It's better to stay short on the pair, as it's likely to extend its fall towards the level of 1.1841 and 1.1759. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.